All right, folks, we're getting into the August market report. So before I start, I know you're not going to watch the full video. We're going to go over three main points. First one, we're going to talk about inflation trends and interest rates and what to expect in the coming months. Second, we're going to dive into days on market as well as closed sales. And lastly, we're going to wrap up talking about what your goals are and how that is affected by today's market. First point, inflation, at least the CPI data, went up from 3.1% to 3.6%. This is definitely a step back and not in the right direction, especially for the Fed looking for a 2% CPI or PCE metric. So is this going to affect things majorly? I don't know. I think it's going to take time to tell, but most likely we will see rates rise a little bit to combat this. I think our long-term view that I've talked about over the past few months is still intact. At some point, that CPI data is going to be crushed, inflation is going to be super low, and the Fed is going to be able to lower rates to a much more feasible level for a lot of you buyers out there. So whether that means 5% for you or 4%, it's tough to tell, but that's just something we're going to have to wait and see on. I do think it might be a little more delayed now because this is a step backwards, with CPI data rising even further instead of it continually going down like it has over the past 9 months or so. So it's going to be a waiting game. I was thinking maybe start of the year, early spring, we would see those rates start to drop. But most likely this will push that back a tiny bit. So I don't know if that'll be mid-spring, late spring, summer. I really wish I could read the future and tell, but I guess you can rest assured that that is a trend that will likely unfold. Second off, we're going to talk about the days on market and the closed sales. So in Ada and Canyon County, the days on market year over year were around 16% increase from last year. And that might sound like, okay, days on market, they're still going up. But what's interesting is in the month of July, they were up 60% year over year. So what this means is that homes have, relatively to last month, decreased a ton in how many days they're staying on market, which means they're moving a lot quicker, which also gets us into the closed sales piece, where closed sales have also increased in the month of August, meaning the activity in the market has picked up and there's a lot more people interested. So I think something that's important to consider here is despite the overarching high interest rates and less buyers interested in the market, there's still a very limited inventory level. And with that being said, houses under $400,000 are moving very fast. It really hasn't slowed down much there. There's a lot of interest. There's a lot of qualified buyers. In different price ranges, it might be a different story. The luxury markets have seemed to slow a little bit, but depending on which price point and which area you're looking in, there's a lot of real estate that's still moving. And one thing that I've noticed is when something new happens, maybe negatively, you could say, that affects buying power, like say rates go above 7%, everybody kind of takes a break, steps back, and they wait, and they really don't want to dive in because they want to see what happens. And I think we saw this a few months ago when rates hit 7%. But what also happens is after month 2, month 3, and month 4 of those conditions staying exactly the same, then people start to say, okay, screw it, I want to get a house, I want to start this journey for my family, and they enter the market once things have been stabilized for a few months. So I feel like we're kind of in that 3 to 4 month period with rates being at 7%, where a lot of people are wanting to make that move despite rates, knowing that they can refinance in the future. Lastly, what does this mean for you and what you're looking for? Everybody's situation is different, but as I said, it really depends on what neighborhood you're looking in, what zip code you're looking in, what you're qualified for, how much you're wanting to spend on a house. These factors can change the specific market you're looking at significantly, especially if you're looking at a market where there's no homes available, and when they do go on market, they sell for 30 grand over ask and they do it in one day. Or if you're looking at a market where there's hundreds of listings just sitting, no one's moving on them, there doesn't seem to be a high demand. The way that you approach an offer on something like that market versus the first one I said is completely different. So really depends on where you're looking. If you're looking for somebody to help you out throughout that process and guide you and show you the best way to go, I would love to hear from you. You can comment down below or you can send me a message. I'd be happy to help.